when I saw oil hitting $10 or about to hit $10, I was like, Jesus, I've been expecting $10 for a long time now. I'm going to go long. So from a trading setup point of view, I was not flawed. And I guess my analysis is like, let's say, it's like a car journey. You all get in your car and drive to work or your job or wherever your workplace is every day, etc. But on this occasion, in your car journey to work, Puff the Magic Dragon just appeared out of magic and sat his ass on your front bonnet and wrote off your car. That's as crazy as... So, as crazy as Puff the Magic Dragon even existing and then writing off your car on the way to work is as crazy as oil going to minus $37 a barrel. Right, that's 2 o'clock. Let's crack on. What I'm going to do is go through a whole bits of basically as much as I can about oil. I just need to get everything out there because I tend to go off on a tangent. So I've actually made a few notes just to keep me on track. And hopefully this will make sense of what the hell has happened yesterday, what's likely to happen, the knock-on effects, yada yada yada. Then I'll open it up for a Q&A. Hopefully my voice lasts. I've got a weird tickly voice. I haven't left the house for a month, so it's not COVID, thank God. Right, there is a chat box, a text chat box, so please put your questions there instead of interrupting the flow for the moment. I will get back to the questions. So let's crack on, 2 o'clock. Okay, what the fuck happened with oil? Like, it is insane what happened. So, for those of you who are uninitiated, oil dropped 300%, just over 300% in a day. It was nuts. It opened up on, in fact, if we get a chart open, you'll see, it pretty much opened up at just under $18, $19, yeah, just under 18. It finished, so on FXCM it went to zero, but actually on the US benchmark it carried on to minus $37 a barrel. So a 300% drop, and it is literally the most insane move I've ever seen in my life. Like, I've been trading for over 15 years now, and I've seen a lot in 15 years. And I'm a student of money and economic history, so I've read about a lot, beyond my actual trading experience. And just when I think I've seen everything, oil comes along, goes, here, hold my barrel, and then literally just dives bombs into the gutter. It's I'm flabbergasted. I am still speechless. Trying to explain to my wife what happened last night. I was like, honey, it's as though aliens are now not only exist, they're not just in the solar system, they've literally just landed on planet Earth, and they've taken over a country. It's as big a deal as that for the uninitiated. So so go back to my notes before I go off on a tangent. I'm useless at things like this. So what happened? So Saudi basically had a massive falling out with Russia. Like, I wasn't in the meeting, obviously. No one knows what was said in the meeting, but I can imagine that the two parties, well, there were several parties in that meeting, but the Russia and Saudi party, they must have been shouting at each other. Like, so if you go back a bit, what happened is that Trump tried to broker a deal with OPEC, and basically the world is slowing down. It's grinding to a halt. So there's more supply than demand at the moment, and so what this deal was supposed to do is that they're trying to get all of OPEC to just reduce the amount of supply. So instead of just carrying on at normal rates of mining, producing, refining oil, they wanted to slow that down so we wouldn't have this massive asymmetrical sort of supply and demand, and they're trying to basically arrest the price because it's hurting all oil exporters or oil producers. So there's a different thing between producers and exporters. So for example, there may be confusion when people hear that the United States is the world's biggest oil producer, and you're thinking, well, wait a minute, I thought Saudi was, because Saudi's always been the big dog when it comes to oil. And the thing is that the US is the biggest producer, but it consumes a lot of their oil that they produce. So they don't export as much. However, the world's biggest exporter is Saudi. So hopefully that makes some sort of difference. Anyway, so they got all of OPEC in this deal. Trump supposedly brokered this deal where OPEC had all agreed to uniformly reduce their supply to protect prices slightly, which was a bit of a feat. And the price should have stabilized, if not gone up. What happened? Oil literally just shat itself. And I mean, this was probably a few days ago, and it didn't do anything. It just slid and slid and slid. And it was coming towards the end of the expiry date. So I'll get onto that in a bit. So long story short, whatever happened in that meeting, Saudi wanted to really hurt Russia. So Russia's the biggest exporting nation that is not in OPEC, the oil producing countries, and they've spited themselves to hurt Russia. It's a bit of a crude analogy. It's as though they got Russia on the floor, put their foot on Russia's head, and then shot their foot, hoping to hurt Russia. So they're shooting themselves in the foot to hurt Russia because. Yeah, and then what they did is they just carried on. They just oversupplied. They just flooded the market and with oil, and you don't need to increase supply that much. So and so that's what's happened. And then they literally killed oil. I'll come into the futures in a bit. So first of all, they're the two bits that I sort of wanted to cover. So let's go on to first principles. So I always break everything down to the bare nuts and bolts of an issue whenever I'm looking at something new or just trying to get my head around it, because I got massively slapped in the face yesterday, and a lot of it rocked my core understanding of economics. Just like for many, many years, hundreds of years, economists have always said that negative interest rates are impossible. No one would ever pay a bank money to store their own money. Yet what happened, like in Japan a long time ago and more recently across the world, we've got negative interest rates. Like the impossible is becoming possible, which is insane. And if you asked me a year ago, when oil was, I don't know, $50 a barrel, or even a couple of years ago where it was $100 a barrel, and said, right, 20th of April, 2020, what's more likely to happen? Aliens landing on Earth and everyone knows about it, or oil going to minus $37 a barrel? I would have picked aliens. Every time. Hell, a month ago, if you asked me that question, hell, yesterday, if you asked me that question, aliens becoming a known fact or oil going to minus $37 for that contract, I still would have picked aliens. Like, this is how crazy it is. It's just nuts. So yeah, going back to first principles, you have to. So yesterday I got slapped in the face. So my oil trade lost me £42,200 and a few pennies. I forgot the pennies, but yeah, it was a big trade. So it was a bit of a punt. It hasn't wiped me out. The account that I was trading with, most of that was profits I've gained over the last couple of months anyway, and I only lost a little bit of seed capital. So I'm not hurt. So yeah, I'm not fussed, and which is why if you look at that video, your videos, this one, this is not going to age very well. So this is where I said, this was a recording where I said, hey, I'm going to go long on oil, etc. But as you'll see in this, I don't know where it is, I said literally just risk, a couple of 2% max risk in total. So you shouldn't have gone all in like me. So for me, it was a bit of a punt. So, but as I said, aliens are more likely to land on Earth than oil going to zero. I even said this somewhere here. I was like, oil is not going to zero. But I got slapped in the face. So yesterday, I didn't sleep last night. I was lying in bed going, what in my understanding of macroeconomics is so flawed that I didn't see this coming? And I guess there wasn't too much flawed. I've been I've been really critical of my own, understanding of everything. And, I've placed similar trades like this time and time again over the years, hundreds of times. and they've worked perfectly. I've made a killing out of setups like this, going long on bounces of big levels. And that's basically what happened. So first principles. What is oil? Oil is simply it's a fossil fuel. We need it. It's the lifeblood of the world economy. Every country needs energy, right? So everyone needs energy, down to the average person. I'm in a house right now. We have internet and electricity. Where does electricity come from? Predominantly oil. Someone is drawing my screen. I don't know if... No, sorry, 1 second. Someone's just drawn a big red line down my screen. Annotate. Clear all drawing. There we go. Cool. So yeah, everyone needs energy, right? Solar is going to be the world's leading energy source over time. Give it a few years. Battery tech's getting great. I'm not going to talk about solar today. But oil is still freaking cheap, and we need it for everything. 97% of everything on the planet that is consumed is moved by truck. What do trucks use? Diesel. Oil is a big thing. So you have to understand that oil is the most used commodity on the planet. It's about 18,500 different uses. The second most used commodity on the planet is silver. And so, yeah, we need it. So it is literally the blood coursing through the veins of the planet. So always start with the nutshell and then move up. So what's happened? We've had a massive sliding of prices over the last... Oh, where's my annotation? I need the mouse back. Here we go. So if you look at oil on a bigger picture, let's get the weekly chart open. You'll see oil has just been dying for a long time. Really since 2008. I mean, that was what happened during the 2008 crash. And market crashes and oil crashes go hand in hand. I think in a nutshell, when the world economy slows down and stops using stuff and stops consuming stuff, and there's no hot wars going on, oil demand drops, which is why you have a big crash over here. And literally since 2014, it's been game over. It crashed from 105 and it hasn't really seen it back. And I still am skeptical if we will ever see $60 a barrel again. I just can't see it happening. So, but again, I was so wrong yesterday. I could be really wrong again. So what do we need? So that's that. Oil has been falling, and we've had the recent market crash. Hence, oil has fallen again. So if we get back to that chart, So you have to understand that the main revenue stream of OPEC or any oil producing or exporting nation, their main revenue source is oil. Okay, they need to sell it. And if you do, I haven't got the figures, you can Google it, but most countries need crude oil prices around $70 to $90 a barrel just to balance their national budget. And I'm talking about just the oil producers here. So it'll cost them a lot less to produce it, but they need oil around $70 to $90 a barrel across the board so they can balance their national budget. If oil is below that, they're screwed. They start eating into their natural reserves, their cash reserves, etc., because they're effectively selling things at a loss. Now, the country that can produce oil the cheapest is Saudi. They can produce oil in the single digits, so probably $8, maybe $9 a barrel, which is a lot cheaper than anyone else. So they can take this hit, and they've got bigger reserves, cash reserves, than pretty much anyone else. So they know that they can drop the May contract to -37 and not be too hurt, and they know it's going to slap Russia, it's going to slap OPEC in general, and it's going to slap America big time. So what happened yesterday was literally the very last nail in the coffin of the global economy, because people think, oh yeah, it's not that bad because oil, it's going to hurt the producers, but the consumers are going to win. Like anyone that's buying oil is getting it cheap, or they're being paid to take delivery of it. But it's not like that. It's literally, you have to understand, when the US sneezes, the world catches Ebola. Not COVID-19, they catch Ebola. So if the US goes down, which is the Titanic, every other country are like the inhabitants of the Titanic. Everyone gets fucked. So yeah, I think it's short-term thinking if you're thinking, oh no, it doesn't hurt anyone here, only the exporters. Well, I guess this is giving us another example where you can indeed see falling oil prices in an inflationary market. So I'm just going to mute everyone for the moment. Stand by. Mute. Okay. So what happens is, obviously, if the world economy slows down, they're using less oil, and manufacturers are using less oil to boot. If people aren't buying stuff, that means there's less demand on stuff. And in order to make and manufacture stuff, you need oil. So what then happens is you have less oil being used, which means there's less commodities out there. There's less stuff like food, things to buy, etc. But you have in the financial scene massive stimulus. So you have central banks all over the world printing currency like no tomorrow. So you have this increased currency supply, but the same or like a diminished amount of stuff out there and also being made. So that then all that happens is that extra surplus cash is basically the price sponge absorbs it all up. So this is another oddity which not a lot of people are expecting, where you're going to get falling oil prices in an inflationary world, which is just nuts. So that, in a nutshell, is first principles. So let's get my little clicker. So tick. Now, options and futures. So this is where I'm going to lose a lot of people. And if I'm going too fast, I will go to the questions box at the end. But this is also being recorded, so you can go over this in slow time. So options and futures are the world's oldest derivatives. They've been around for thousands of years. They're created by farmers. And so a farmer could sell their next year's stock to make sure that they got income, etc. But here's a key difference. So with an option, if I buy an option, a call option, so I have an option to buy this pen, what this means is that, let's say it's a 1-year call option. What this means is that at the end of this year, at the end of this options contract, I have the option to buy it. So what I'll do is I'll pay a little premium to have the ability, the option to buy it, and then at the end of the contract, I can then go and buy the pen at whatever the price, or at the price that I've already locked in. So in my case, let's say this pen is 10 pence. Now, sorry, so I'm just going to try and, I don't know why this is not muting everyone. Mute all. Here we go. There we go. Yeah. So I'm then hoping. So I'll pay a little commission now, and then I'm hoping so I have the option to buy it at 10p, but I'm hoping in a year's time this pen is worth 20p, and then I can buy this pen for 10p even though it's worth 20. So that's basically a call option, and you can do the other side. Now, options are good because you're not committed. Now, a future is basically an option on steroids, because what happens is if I buy a futures contract on this pen for 10p for, let's say, a year's time, in a year's time I have to pay for this pen and I have to take delivery of it unless I roll the contract over. So that's the thing with a futures contract. You have to buy the thing or take delivery of the thing at the end of the contract. So that's options and futures in a little nutshell. So delivery. So what actually happened yesterday is that in fact, let's look at the plane ticket analogy first. So this is commonly used with options and futures, or the ice cube, in fact. So when you buy an options contract or a futures contract, it's like an ice cube. The moment you get an ice cube out of the freezer, it's its most valuable. But the longer you hold the ice cube in the palm of your hand, it's going to melt and diminish in size. So the less value that ice cube becomes. And it's the same with a plane ticket. You could buy a plane ticket now to fly in, say, a month's time, and it's fine. But what happens if it gets closer to the time where, there's lockdowns around, etc. The amount of plane flight or routes have diminished, and that, and there's no one going traveling. Let's say it becomes like the day before your flight. Like, that ticket is becoming more worthless and more worthless, and the plane is going to take off regardless whether you get on it or not. And so by the time the plane's taken off and you're not on the plane, that plane ticket is literally worthless. And that's pretty much what happened yesterday. So we had the May futures contract expiring yesterday. So what basically happened is we've had, don't forget, this is why I showed you the weekly chart, we've had falling oil prices for freaking over a decade now. Big falling, especially since 2014. And during all of these dips, what every country in the world has been topping up their oil strategic reserves. As in, a country will be like, okay, we need lots of oil because it's coming to winter or whatever. Let's fill up our strategic reserves as much as possible. So every country will have a whole bunch of underground reservoirs of oil. They're not called reservoirs. Or they'll have a whole bunch of oil tankers just sat in the dock, all filled to the brim with oil, etc. And so over the years, everyone around the world has pretty much filled their national reserves or their strategic reserves, which means there's nowhere else to store the oil. Yet OPEC are still pumping out millions of barrels of oil per day. And where's it going to go? So before, like a year or so ago, we had the situation where oil was being put into oil tankers, and then the oil tankers literally had nowhere to drop it off. So they were literally just sailing around in international waters, just going, shit, okay, I've got orders to say, travel to the destination very slowly because there's nowhere to store it. But we're now at the situation, especially over the last couple of weeks, where oil's been so freaking cheap. There's literally nowhere to store it. Cushing is the main depository in the US, so all the oil goes to Cushing basically. They're full, everyone's full, and it got to the end of this May contract where Saudi basically slapped everyone across the face. They carried on overproducing, and sorry, someone just said you can't hear me. Okay, no, you can. Sorry, what I was going to say. I need to stop looking at that chat box because it disturbs me. So there's nothing. And it got to the end of this May contract where there was nowhere to deliver it. And so that's why the price just went because no one wanted to take delivery. All of the people that had basically gone long on the May futures contract, they're like, shit, I don't want to take delivery of 100,000 barrels of oil. You can't put it in your garden. You can't fill it in a swimming pool. Swimming pools are quite leaky anyway. But yeah, like, you couldn't store a swimming pool full of oil anywhere. And so in order for them to get out of that obligation where they had to buy and take delivery of the physical oil, they're like, fuck it, I don't care. I'll sell my oil at $10 a barrel, $5 a barrel, $2, $1. I don't care. Someone buy my freaking oil. I do not want to take delivery of it tomorrow. Or I don't want 100,000 barrels of oil coming my way. To the point where it got to minus $37 a barrel, and that's where the market saw some sort of equilibrium where the producers were like, okay, we will pay you $37 a barrel to just take delivery of this freaking oil. Absolutely insane. And so that option expired. So if we take a look at the price on the daily chart, this is what happened. So obviously on FXCM it stopped at zero because the way we trade, you can't lose more than in your account. So it didn't go to negative. But then the new contract opened last night, and so it opened up all that here at 21.39. And so this is why I tried to short it as soon as I could, because don't think, ladies and gentlemen, that this is a one-off occurrence. I would not be at all surprised if this is going to happen again, because nothing has changed. Nothing has changed. Are they still overproducing oil? Yes. Is there anywhere to store it? No. So what's going to happen this month? Well, barring, I don't know, a country, I don't know, I don't know where they're going to put it. There's no more oil tankers out there, or very few oil tankers out there that can take on a whole bunch of oil. So I would not be surprised if the June contract had the same fate, unless, well, there's a big if here, unless OPEC suddenly goes, I can't take another month of negative oil or zero or low oil. Let's just all cut production. But I think this is going to be like a Wild Wild West saloon standoff where they're like, well, you stop producing first. Because all the oil producing nations, they don't want to, like, they're all expecting Saudi to take the hit. They're like, Saudi, just stop producing. But they all want to keep on producing because that's their main revenue. They still need cash flow. So they're happy to sell it at a slight loss because they still need the cash flow coming in. So, yeah, it's tricky. I would not, and this is why I'm shorting oil again. Whether you take my advice or not. I'm not saying to copy me. This is what I'm personally doing. The account I'm trading on right now is a risk account. Is a risk account. So I'm not emotionally attached to it at all. Hence why having a 40 odd grand hit yesterday has not left me crying in the corner. So yeah, that's the delivery issue. Let's just tick that off. So there's a thing called backwardation and contango. How do I explain this? I need more room on this paper. So these are, so if we draw a little chart and let's put price over here and time over here. Okay, so with an options, or let's just say a futures contract, what you have with a normal commodity, which is in stock in so what you have with a normal with a normal commodity which is in stock, it's not perishable, it's not finite, there's good supply. What you tend to have is a curve that looks like this. So what this means is that the price to deliver it now is a lot cheaper than to get it delivered, let's say, in, I don't know, 12 months' time. So let's say it's 12 months over here, 6 months. And so the reason for that is the carry of the cost of carry. So put it this way, let's say I go to, I don't know, I use this pen, a pen maker, okay? And I wanted to buy £100,000 worth of pens. But I didn't want delivery of it right now. So let's just say I don't have the storage, or I don't have the need for it right now, but I want to lock in the price. So what I'm going to do, I'm going to buy a futures contract for this pen, shitloads of these pens. And so the price, if I were to take delivery of it right now, will be quite cheap. It'll be, around here. But if I wanted it to be delivered, let's say, in 12 months' time, it's going to cost a little bit more money, because what the person selling me these pens, they're going to have to put aside a bucket load or a truckload of these pens, and they're going to have to look after it for me. They're going to have to store it somewhere. They're going to lose out on opportunity cost. I mean, they won't be able to sell this load of pens to anyone else. And so this is what the curve looks like with a normal commodity. So in 12 months' time, it will be X amount more than what it is now. So hopefully that makes sense. Now, oil's curve is more like this. So it's a bit weird. It's more of a convenience play. So what happens is that the cheapest price of oil right now is, or the cheapest price for oil is now, as in as soon as possible. As it's because oil is seen as a finite and a precious commodity. So there is, minimal supply. Well, I say minimal with, funny ears here. And so what happens is people it's more convenient to take delivery now or in a month's time compared to, say, 12 months' time. Because what happens is sorry, 1 second. It's behind you. Oh yeah, sorry, the dinosaur. Okay, there's a lot of people saying that you can't hear me, which is concerning. Oh shit. You can hear me now. I've just changed the microphone. So for the last 28 minutes, have you heard anything? You've heard most of it. Oh, fuck. Okay. Man, I was sat here getting everything prepared for ages. Yeah, it's been okay for the last 20 minutes. Okay. Sorry, boys and girls. There's always something else. Okay, at least I haven't been on mute. I've been recording this, so the recording will be there fine. Okay, cool. Thank you. Sorry, I should have looked at it sooner. Yeah. So basically, it's it's more convenient to pay to take delivery of the oil now rather than 6 or 12 months time. So they're prepared to pay a higher price now than in the future. And so the fact that the price of the now contract or the next month contract went to negative is such a massive it's aliens landing on the planet sort of situation here. So that's what's called backwardation. So backwardation is basically when the nearer price is more expensive than the further price, and the opposite is contango. But again, you don't really need to know this. So let's just move on. Yeah, so as I mentioned, Cushing is basically full. Like there's no storage room. So if you had the money, you had the means, the contacts, and the land, or you had contacts with shitloads of land and facilities, there is a really good potential business opportunity here for you. Because what you could do is basically try and find someone or a group of people, whatever, with shitloads of land in America, and you can store, let's say, 100,000 barrels of oil, okay, and you buy a contract of oil. And basically what happens is you could basically take delivery, basically buy a futures contract for cheap, or actually you could wait. So you get the facility prepared, and then you wait to see if something like this happens again, where prices go nuts. So it won't really cost you anything, and I guess this is sort of like a nice insurance policy, or that actually pays you something. So what you could do is you could sort of get everything prepared, and if we go into negative oil again and it gets to something like minus $30 a barrel, well, what will then happen is you will then get paid, what was that, 3 million? 100,000 times 30. So yeah, what will then happen is that the oil producers, or whoever's trying to offload the physical delivery, they will pay you £3 million to take delivery. Take my oil. I'll just put this. There's a bit of a lag with my thingy here. So you get £3 million just to use your land and take delivery of the oil. So that's now yours. And then what you can then do is wait one day, or wait until next contract, where the next contract price will resume. So like we saw last night, the next contract resumed at $21.19. So let's call it $21. So you then sell 100,000 barrels times 20. Let's call it 21. Let's just call it $20 times $20. So it's 2 million quid. And then you get 2 million. So what happens, just by sort of making some phone calls, getting the right people and experts in place to do it, blah blah blah, you can get paid 3 million quid to take the oil, and then wait till the next contract, and then sell all of that oil for 2 million quid. So you end up net 5 million up. Well, gross 5 million up. I don't know what costs will be provided. Now, I think if 100,000 people watch this video, there's still probably going to be 0 people that will be able to pull this off. But if there is someone out there in America with contacts and cash, and that they have the facilities, to do that, this could be a business opportunity which, you can have there, sat there waiting in the background just in case it happens again. It's Alex, it's like the big yellow but for oil. And then what you do is, as soon as the next contract opens, you need to freaking get rid of it and clear out, and someone to take delivery of it. See, that's the thing. You probably only do it once because you probably won't be able to get rid of it, and God knows how much it's going to cost you to store it. So I have no idea how to store oil. So you'd need to pay a lot of people, experts, people in the field. But hell, if you're making £5 million revenue from this, Anyway, so that was my silly business idea. I'm pretty sure some people will be doing that. I mean, there's shitloads of land available in the US. So, right. That's that. Plane ticket, already discussed that. Let's move on. So, yeah, I think I should have put this further up. What makes prices go up and down with oil? And so, when you're looking at oil prices, why does it go up and down? You basically got three things. You've got supply, demand, and monopoly. So it's a bit like, so obviously if supply goes up and demand remains constant, guess what? The price is going to go down. If supply evaporates and demand stays constant, price is going to go up. So that's, I guess, the seesaw that you have, supply and demand, and the price will do, whatever. But you also have this thing called monopoly. So obviously OPEC are the monopolies of oil, etc. And I think what's happened, so what has actually happened? Supply has gone up a slight bit, not too much. Yet the price just went, there wasn't enough supply to go to increase yesterday, or in the last week or so, to push oil to minus $37. There wasn't that much of an extra supply. Demand didn't go up, or demand pretty much stayed constant. And so what happened, I think a big element is the monopoly. I think a lot of people are starting to lose faith in the petrodollar system. They can see that the US or OPEC, any oil producing nation, is on its feet at the moment, on its knees at the moment. And I think this was just confirmation that the world economy is going down big time. Like put it this way, US is the biggest oil producer on the planet. Like, a lot of the US's revenue is by oil, and so if oil prices hit the gutter, all of a sudden they're losing lots of revenue. There's 2 million oil or energy jobs in America. If oil continues going down like this, you're going to have shitloads of unemployment, or unemployment's going to go through the roof, even more than it is now. The last time I checked, it was 17 million people have been unemployed in the last month. It's going to hurt revenue. And remember, most countries' revenue are from tax, so by taxing its inhabitants. But also the US, it's not only its tax revenue, they're losing tax revenue in general from the public because everyone's in lockdown and they're not working, etc. They're losing tax revenue from the oil companies because they're basically going bankrupt as we speak, left, right and centre. All the shale is gone. It's a double whammy. And so how the hell is the stock market expected to go up? And so what may happen is that you're losing faith. The dollar faith will probably go down at some point. I haven't looked at it recently. If you look at the dollar index right now, it's actually gone up a little bit. But it won't be long before, if the faith in the dollar starts falling, it's irrelevant of how many trillions of dollars they pump into of stimulus they pump into the economy. Because if the dollar's worth nothing, you can print $10 trillion worth. It's going to mean jack shit. So this is another reason why I placed another short on. I'm shorting stocks anyway, but I think maybe this could be the bend at the end. Maybe. Big maybe. So I don't. Yeah, it's tough. And a rough rule of thumb is that for a 1% increase in supply, you have a 10% drop in price. So that's a rule of thumb, by the way. So tick. Let's have a look. Now, here is the interesting thing. Gold. So 1 second, just checking sound. Yep, still recording. Blah blah blah. Okay, so what we've had with oil, just to recap, is that you basically had loads of people going long on oil. It's getting towards the end of the contract. They're like, shit, I don't want to take physical delivery of it. And they're literally just getting rid of it for whatever price, $0, $1, minus dollars, whatever, because they didn't want to take delivery of gold. Now, of their oil. Now, gold and silver is different. You can store a lot of gold. I used to have, there's one point I had a 1 kilogram bar of gold, and it was tiny. It was like this big. You can store a lot of bulk for your money. Now, I think the inverse is going to happen with gold. So, for example, most of the time you have big gold buyers going long in the gold futures market. But what happens is, but they never take delivery of it. Okay, so they just keep their big long position and they roll it over month after month, because all of these big gold purchases, a lot of them are done by suppliers, a lot of them are done as in the gold producers, a lot of them are done by just big institutions, and they just want to have a bit of a hedge. So yeah, and every month they just roll it over, and they know that in the long term gold is going to go up, or they hope, or they think. So what happens is that in order for someone to go long on the futures market, you also need someone to sell. Okay, you need a shorter. For every long, there's a short, so to speak. And so if someone is effectively buying gold on the COMEX, the commodities exchange, there needs to be someone selling that gold. Now, again, it could be producers that are also supplying the sell side, but most of the time it's institutions, it's traders, it's speculators, etc. And a lot of the time they're naked. They're doing naked shorting on the futures market, which is is crazy risky. But nothing really bad has happened on the gold futures market, not for a long time, not to the scale of what's happened with oil. So I see in the coming months, maybe in the coming years, probably in months, we'll see the inverse for gold, where what you'll have is that these people that have gone long on gold, they'll see that stocks are tanking, oil is tanking, everything's tanking, the world economy isn't improving, everyone's, the only way to get out of a depression or a recession is economic growth. And we can't do that when your whole work engine is locked down, or unemployed. And loads of businesses are going bust, especially the small businesses. It's absolutely nuts. So it doesn't take many gold long buyers on the futures market to go, oh, actually, I don't really want to roll over this contract. I'm just going to take delivery. I just want physical delivery of my gold. Even if they bought a couple $1 million worth of gold bars, it's not going to take much space. It's, a few briefcases full of gold. It's quite compact. Even with silver. Silver, you can take a lot of silver for your money. So they'll start taking delivery of it. Now, what's going to happen? These naked shorters, and these are big financial institutions, a lot of investment banks are probably naked shorting as well. They're like, oh shit! You have all of these, even just a handful of people asking for, they give forward notice to the commodity exchange and go, hey, I want physical delivery of my gold at the end of the month, please, good. And there's an obligation to the short seller or the naked shorter to deliver. So what's going to happen is that they have no gold, so they're like, oh shit, I've got a week or two to find physical gold to actually send to the buyer. So then they'll try and enter the physical gold market, and they'll go to producers, suppliers, gold bullion dealers, etc., and say, hey, I need to buy $1 billion worth of gold. No, not billion, 50 million pounds worth of gold, please. And they go, sorry. Because guess what? Gold has run out. You cannot go, hell, if you go to coininvest.com, the Europe's biggest bullion wholesaler, a lot of their gold has run out. You cannot buy gold in bulk at the moment. There's no supply. Don't forget, China has been buying more gold every month than is produced every month for a long time. Not every month, but every now and again it just goes big bulk purchases. Because China's they're just taking all the US debt and going, okay, we'll use this funny fake monopoly money and just convert it into something real. That's why they've been putting all in Africa and Australia and gold and land. They've been using fake monopoly money to buy physical shit. Chinese are clever. They're clever mofos. Which is why they'll probably be the major world nation at some point. So so the naked shorters are gonna trying to scramble around trying to find physical gold and silver, and they won't be able to get their hands on it at bulk. So they're then gonna have to beg, plea, borrow, steal, and just get on their knees and beg to get hands on the physical delivery, because they have to honour their obligation. It's either that or go bust. So let's say gold is at $1,700 an ounce, and they're trying to facilitate a deal. Like, I wouldn't be surprised if gold shoots up to $3,000, $10,000 over a month or over a few months, because a lot of these people sat there with the physical gold. They're not stupid. If you're sat with hundreds of millions of dollars worth of physical gold, you're not a stupid person or group. You'll know what's happening, and you're like, nah. Why would I get rid of this when you can't find it anywhere else and the future's up? So you may see a massive gap up in prices from $2,000 up to $10,000 very, very quickly, or at least a 300% uplift. So where would that take? What was it? 17. So 70. Shit. Yeah, $5,000. Sorry, I could have done it. My math is shit. So yeah, I think that's going to be pretty interesting. Now, what I'm not saying is go out and fill your boots with gold right now. It's always worth having. It's part of the 6 Gs or the 7 Gs. Gold, guns, grub, ground, gasoline, generator. 6 Gs. 7 Gs for girls if you need to reprocreate the planet. But yeah, gold and silver is always a good insurance policy to have. So yeah, green pen. I still see falling in gold to come. I think when we see the equity markets really crash, I think gold and silver, because there's so many gold and silver paper derivatives out there, it'll probably follow suit with it. So if we see, what is this? Yeah, there we go. So we had a bit of a move down today, but yeah. Yeah, so please don't misconstrue what I'm saying here. I'm not saying go out and fill your boots with gold. I'm just saying it doesn't hurt to have exposure to physical. By the way, don't have paper silver or gold. If you can't hold it, you don't own it. So that's that. So market knock-on effects. What the hell is going to happen? It's the billion-dollar question. It's the $250 trillion question, actually. I don't know. No one knows. There's so many, I hate the word now because it's overused, but there's so many unprecedented things happening in the world markets today that it's, I don't know. Every day I'm second guessing my base knowledge of markets, just because I would never have thought that oil could have gone to zero or negative. So yeah, it's interesting. So what's going to happen? I wouldn't be surprised if we had a new first and we saw negative GDP in some countries. I think that's not actually that hard to imagine. I mean, there's another rule of thumb. Let's write it down here. So rule of thumb is that for every 3 days, a country drops tools. So for every 3 days that a country is inactive, businesses shut down, etc., GDP drops 1%. 1%. And remember, the only way out of depression or recession is economic growth. Are we having that right now? No, sirree. There is no economic growth going on right now. All we have is economic stimulus, debt creation. Oil, are we going to have a repeat of this? I think, yeah, we could. We really could. Like, now we know this is a possibility. Like, for those that are holding, going long on oil on the June contract, they're probably really scared right now. They're probably going, shit, what happened? Like, the longer that we hold this contract, remember the melting ice cube or the plane ticket analogy? It gets more worthless closer to the expiry date. So maybe we could have a sell-off a lot quicker. I mean, hell, today we opened at $21 and it went all the way down to $11, which is just freaking insane. It's just nuts. It's retraced slightly, but I mean, if we look on the lower time frames, no real patterns there. But it's just nuts. The fact it has dropped to $10 today is just incredible as well. So I think we could have a repeat of this. Maybe this month, maybe next month. But I really wouldn't want to be going long on oil's futures right now because nothing has changed. No one has extra storage. No one's just suddenly created a new island full of oil storage. They aren't building any more oil tankers within the space of a month. So that's interesting. So yeah, that's why I've got 2 shorts on it at the moment. For me, because of FXM, I'll probably take profit as it approaches 0. How many pips is that? For that trade, 1,500 pips, and this one's about 2,000, 1,800. So yeah, it could be nice. Yeah, so that's one thing. That could be a repeat. But what this also means, as I sort of mentioned earlier, is that the stock market is screwed. Or it already was, but I just think now that America's had a massive slap to the face, oil revenues are dropping, or the amount of Chapter 11s, insolvencies, bankruptcies going to happen in the US is going to be nuts. So what are they going to do? They're going to try and pump like crazy. But the unanswered question, which I cannot get an answer for, I'm sorry, boys and girls, is that how effective will this next round of stimulus be? I mean, if we look at the stock market, so here's the S&P 500. We had, $2 trillion of pumping, effectively, and that created a 50% retrace. Like, now we've got a whiff of moving down. Like, how effective is it going to be? I don't know. I literally don't know. And by the way, the only reason, like, all these oil companies have managed to succeed and survive over the last 5 years is because of the Fed. The Fed has just been bailing everyone out. The Fed is now buying junk bonds, which is nuts. There's a $1.5 trillion energy junk bond bubble. And if this oil debacle doesn't kill it, God, like, there's only so much stimulus you can print. It's ridiculous. Like, yeah, it's nuts. As I keep saying to myself, this is as batshit crazy as aliens landing, and everyone knows about it from a trading perspective. So, also, there's going to be a wave of bankruptcies in other oil exporting nations. Russia, they're screwed. I mean, Russia will have probably some sort of ruble default now. Russia are a lot more screwed than... Russia and America probably get screwed the same, but either way, it's going to hurt the currency. It's going to negatively impact the value of the ruble or the dollar. So, yeah, I think all the fundamentals say stocks will just carry on dropping off a cliff, but I just don't know how effective that bullet in the chamber in the Federal Reserve is. Like, I don't know whether they're using a potato gun or a paintball gun or a freaking bazooka. It could be, I don't know. So yeah, it could go either way. I mean, technical analysis shows that we should have a falling now. Like if we look at this, we've got a rising compression in a falling market, which is quite bearish. Ignore all this yellow stuff. This is something I drew yesterday. But yeah, eventually the move is down. But we don't know how long they could keep this up for. And as I said yesterday, this line here is November. This is when Trump is going to try to get re-elected, and so he will do everything he possibly can to try and make sure stocks are above than when he got in 4 years ago or whatever. But I don't think he can prop up the markets up until November. I think sometimes there's only so much you can prop up. So yeah, remember, tax revenues and oil revenues for oil producing nations have just disappeared. So, that is I think that's everything on my little doodle list. Whoopsie. No, not everything. Sorry. Stand by. So we got that. Talked about that. Trading. Yes. Oh yeah, the car journey. So, I announced on Facebook, etc. I don't hide my losses. Like, yeah, I lost £42,200 yesterday with my oil long. And would I do it again? Yeah. I was trying to understand the reasoning why I went in, and the reasoning of why I went long at $10 is actually valid. Like, don't forget, this has never happened before. And over the years of trading, I've done identical setups hundreds of times. I've made a freaking living from trading, and I've made an absolute fortune from trading by doing almost identical setups. And when I say identical setups, what I mean is this. So let's say there's a market, and there is, for some reason, the mother of all levels, like support levels, and we see a market rapidly crashing down into this level. One thing I've done for freaking well over a decade now is go long on that level, anticipating a bit of a sharp bounce to wherever. Or the inverse, if there is a massive resistance level here, like an all-time high or something really, really strong, depending on what market you're doing, what I'll do is, as the market gets into that, I will then heavily start selling at that resistance level, aiming for a bounce down. I mean, I've done this for years. So all I saw with oil is, don't forget, for a long freaking time I've been calling $10 oil, and anyone that's been in the community can attest to that. I was calling $10 oil a few months ago. Sorry, I'm still on the daily chart. I was calling it when oil was $100 a barrel. I got a lot of flack. Even a few months ago when it was $30 and $50, I was calling $10, and I was called an idiot for thinking that. So my reasoning behind it, when I saw oil hitting $10 or about to hit $10, I was like, Jesus, I've been expecting $10 for a long time now. I'm going to go long. So from a trading setup point of view, I was not flawed. And I guess my analysis is like, let's say, yeah, it's like a car journey. You all get in your car and drive to work or your job or wherever your workplace is every day, etc. But on this occasion, in your car journey to work, Puff the Magic Dragon just appeared out of magic and sat his ass on your front bonnet and wrote off your car. That's as crazy as... So, as crazy as Puff the Magic Dragon even existing and then writing off your car on the way to work is as crazy as oil going to minus $37 a barrel. Just... yeah. So, I could not have forecasted it. So, if I saw that setup again on oil or copper or gold or Eurodollar or whatever, I'll still do exactly the same thing. And remember, trading is not about being right on every single freaking trade. It's about your winners massively outweighing your winners in the long run. So, yeah. So that's that. So that's oil. So oil's doing that. What is this doing? Oh, having a bit of a bounce. Look at this. Stocks have bounced off that little... literally as we were speaking. So the US market... oh my God. Someone's just doodled all over my chart. I'm just going to delete that doodle. Clear all drawings. Here we go. So yeah, we've just hit this support level here. So it's going to be interesting to see if that survives. Are we going to see further movement up? I don't know. Could someone please stop doodling over my screen? Right. Just stop touching your screen, whoever it is. So I think that's it. Now I'm going to look at all the questions. So I'll try and zoom up. So I'll answer the first questions first. Why did FXCM stop at 0 and not drag us all down? So FXCM is basically a spread. So the beauty of spread betting is that you will never lose more than it on your shirt. Whereas if you do CFD trading, you can lose more than is in your account. So yeah, all the contracts for FXM just stop at 0, so that's good. Seriously, who's drawing willies on my S&P 500 chart? Honestly, probably one of my many trolls. So yeah, so that's that. They'll need to start a war to increase prices. Yeah, they could. Iran is in trouble. Yeah. Supply and demand. Yep. Devinder, future prices not based on speculation but lack of supply. It's both. It is both, mate. So, seriously, I'm just going to stop sharing my screen, and then you can't doodle wherever someone... There are so many immature people in the world these days. Right, how do I... I'm just trying to stop share. Here we go. There we go. So, let's look at the chat box still. Hopefully you can still see me. Supply and demand, yeah, future lack of prices. Alex says, I feel like if this continues, the US is going to say that ISIS has taken over Saudi and they have to introduce some freedom over there. Yeah, maybe. Phil's asked, so when do you recommend going long? All indicators are that there will be no recovery for a very long time. Yeah, so I'm very bearish on indices. I see massive falling in the long run. I just don't know. I'm just worried about that stimulus pump. I don't know how effective their stimulus will be. I mean, yeah, if they effectively printed $10 trillion, or no, even worse is, let's say they bypass the open market operations of the central bank or the Federal Reserve, and so that they can create currency without getting into debt by the Federal Reserve, and the government itself can just issue new currency without the debt. That will give them a more effective printing press, so that there's no debt attributed to that, but it's massively inflationary. So yeah, they could just print $10 trillion worth of digidollars, and that would be very inflationary, and that would create one hell of a spike. Big spike, but it'll be short-lived. The very crude analogy I use is like you've just had a gunshot wound to the heart, and you're in pain, and you go to hospital, and you're like, give me morphine, give me steroids, give me whatever it takes. So you get a massive dose of morphine, but it doesn't fix the inherent problems out there. So yeah, so that's that. Sound not good. So yeah, lots of sound stuff. Sorry about that. The recording will be much clearer. Here we go. Scrolling down to the questions. Sorry. Storage, big yellow, rule of thumb. Okay, Trump's administration is trying to bail out oil. Yeah, they will do. And what's that, and how will it affect the price and fall? So you have to understand, most of the oil producing in America is not done by the government, it's done by private companies. So what's happening is that the energy junk bond bubble is like a $1.5 trillion bubble at the moment. If that pops, everything else pops. Student loans, auto loans, everything pops. So it's interesting how they're going to bail them out. They're going to have to continue extending almost zero interest loans to them to keep, because they need cash flow to stay afloat. Again, a lot of the US's oil exporting is shale. Shale is a hunk of rubbish. Shale is only, I think shale breaks even when crude oil is about $80 a barrel, which is nuts. And just in case you're confused, WTI crude is US oil, and Brent is North Sea derived oil, just in case you're confused between Brent and WTI. So Phil, pump started in the US, down, moving back up, but anyone shorting or long on how it is a casino, yeah, it's swinging wildly. You cannot short anything right now. Yeah, and I completely agree. I am personally clueless at the moment with, like, I think long term you could take a position trade. You just place a position and wait, play the long game. So yeah, you could do that, but at the moment it's such short-term fluctuations, it's ridiculous. The first crash, the Fed bought up a bidless market. Now, once their friends have sold out, they'll allow the collapse and buy for pennies. Yeah, they could do. They've done that before. And And yeah, it's just a matter of time before they openly start buying stocks themselves. At the moment, they're doing it via proxies, like the banks, the primary lenders. But yeah. Okay, cryptos. First crypto question. So what is this going to mean for crypto? So I think in the short term, when indices start crashing again, I think cryptos are going to fall with it, because it's quite linked to cryptos. But I think there will be the disconnect, just like we've now had the disconnect with oil, and that disconnect, like as in oil was basically tracking indice prices, point for point pretty much. And now we've had that disconnect. So oil's disconnected, and I think eventually we're going to have the disconnect from Bitcoin. But I think it's going to be a lot more falling before we see that. I want to get into Bitcoin, I really do, but not just yet. I think like everyone's going on about the halvening, but I think this is just going to be a massive anticlimax. If you look what happens at the halvening, is not much happens. So yeah, I think right now the move is to go to cash, wait for the crash, so you have pouncing ability. But when we start getting into crazy stimulus territory, where they go at the Bank of England, every central bank starts printing like nuts because they're sniffing out deflation. They want to just get rid of any chance of deflation. That is when you need to get into non-inflationary assets, as in assets that cannot be inflated away. So things like land, bullion, Bitcoin, and deleveraged cash flowing businesses. You can Stuart, you can turn off the ability for participants and for annotation. Ooh, okay. I will have to find out how. That'll be that'll be handy. Junaid said arsehole. Yes, whoever that was. Hopefully it's not me. Daniel, when will Bolly bounce be coded for the RT bot? So we're looking. In fact, I'm just going to get my text. I've got my phone here. 1 second. I have an update for you regarding the RT bot. Stand by. RT bot. Here we go. Okay, so we have a lot of the bot updates planned for the 2nd and 3rd of May. So the weekend of the 2nd and 3rd of May. So what we'll be doing in this update is that we'll be getting rid of that MT4 AWS thing. We're basically going to be able to slam an FXCM MT4 account straight into the bot instead of AWS. That'll be really handy. Bolly bounce will be done for that update. You'll be able to save bot settings. Don't worry about that, but it will be there. And admin will be able to share bot settings. So yeah, I think that's the next update, and then we've got a few other bits and bobs. So hopefully, yeah, so that'll be good. Bolly bounce will be interesting. Mohsin, what's the best way to make money? It really depends who you are and what your means are. Like, I personally can afford to take some big hits because I've got a bunch of businesses all doing different cash flows. Yes, I've got some of my businesses I've had to pause temporarily and shut down, like because everyone's on lockdown. But I've got companies which are still cash flowing, so it's okay. I have the ability to take some hits. But imagine a typical person. I guess 90% of the population, they've, minimal savings, minimal rainy day fund, average wage, let's say. It's a lot harder to take. I wouldn't be looking for the markets to be your savior, if that makes sense. I know it's not the answer a lot of you are expecting or wanting to hear, but I think it's the truth. At least try and get some Bitcoin exposure. Like, do whatever it can. Like, get an extra job instead of sitting around all day. Like, I remember when I was broke, I was working like 2 to 3 jobs. I was doing freaking anything possible to get extra cash flow. If I was broke, jobless during this lockdown, I would be working in Tesco's. I would be picking fruit on farms instead of, flying in Romanians to pick our fruit for us. I would be doing every shitty job I could find to get as much extra cash flow as possible. I would be honing in my online marketing skills so I can set up a part-time online based business. I would be literally busting a gut. And that's what I did 10 years ago. Like, I busted a gut back then. And I think it was business. There's a good saying that you need to do the hard work early to make the future selling or your future life easy. Or another cheesy quote is you need to be prepared to live like most won't, so in the future you can live like most can't. So I guess that is the answer no one really cares to hear. Bust a gut. Hell, even now I'm busting a gut. I've just set up another business. So yeah, anyway, enough about me. So what's the best way to make money? Have gold exposure, have silver exposure more than gold, have Bitcoin exposure. Is now a good time to get into trading? It depends what your goals are. If it's for learning purposes, yeah, definitely. Like 10 years, like last year, 2 years ago was the best to get in. Like, I would get into trading to learn, because not only will you learn how to trade, your risk management will get better, and your risk management and in just general life will be a lot better. So, so that's that. Is now time trading. How do you go about doing these markets? I will show you. Let's share the screen. Let's share screen. Here we go. Okay, that's my screen. Hopefully you can see. Let's open up a tab. RT bot. So the good thing is the bot has done fine, because if we look at, let's say, my main aggressive setup, if we just backtest this one and just do test. It's going to take a while. And whilst we're waiting for that, so yeah, in the last couple of months, it's been good. Oh my lord. Okay, I'm just going to take a few seconds here to learn how to disable annotations. I have no idea. Clear all drawings. I have no idea. Disable participants annotation. There we go. It's been good. In fact, if I'm so look at monthly performance. So in February did about 12%, March flat, and this month bit down. But yeah, this doesn't trade oil, and it only trades the Journal 30 with my particular bot. So yeah, all is good with the bot. We've got a trade going at the moment. Euro Swissy is just a bit flat at the moment, as we can see. But look at that. In fact, if we get Euro Swissy up on a proper chart, this is a bearish pattern. So we're shorting. The bot found this setup and is shorting it, but this is bearish. This is either a compression in a falling market, so we should see that, or you could say that this is a bearish rectangle. But either way, the bot is shorting it. So yeah, that's cool. So let's get rid of the bot. Where the questions gone? I've lost the chat box. Stand by. Okay, so how much physical gold, silver do you recommend you invest in? Again, when you buy physical gold and silver, you're not doing it for cash flow. You're doing it as mainly wealth preservation. So you know that your purchasing power is not going to just evaporate as they start printing, and profit is a byproduct. It's inevitable that the IMF is going to reevaluate gold, because it is a precious commodity. There's not that much of it, but and so in order to back a new global monetary system, let's say the IMF's SDR, they'll just revalue it. It's not that there's not that much gold. It's just, at the moment the price is too low for the amount out there. So they could easily revalue gold to $10,000 an ounce, and all of a sudden there's enough gold to back a currency supply. So if that happens, that's when your gold and silver kicks in. Now, if you look at the gold to silver ratio, it's ridiculous. Historically, for 5,000 odd years, the ratio has been about 1 to 15. because historically, depending where you are in time and the planet, for every ounce of gold you dug up, you got 15 ounces of silver. So if we look at silver right now, so the price of gold right now is $16.79. You then divide that by the silver price, which is $14.64. Gold is 114 times more expensive than silver. It is freaking ridiculous. So if you were to draw a little Microsoft Paint, get a chart open. So let's say the 5,000 year average is 1 to 15. So gold, for every ounce of gold, you get 15 ounces of silver. And historically, gold has always been 15 times more expensive than silver. What's happened in recent times is it's just done this. So gold is now 114 times more expensive than silver. And so when you always get mean reversion, you don't see anything that goes vertical without coming back down. So if gold gets reevaluated, silver will be reevaluated as well. And so that will surge in price. And then eventually when that goes back to hell, even 1 to 30, all of a sudden you'll have way more bang for your buck with silver than gold. So yeah, I'm bullish. I'm not buying any more at the moment. I've already got a whole bunch of gold and silver that I bought in 2013, 2014. So I've got my supply. But yeah, in fact, if we're looking at the daily chart, silver just looks exactly like stocks right now. So, except it's broken out. So if you look as into the downside, if you draw that trend line with silver, we've got the bend at the end here, and this look how similar this is to stocks, which is just ridiculous. There, obviously it's got loads of annotations. Just pick another chart. There we go. This is the Dow Jones, and this is silver. Pretty identical, and that's because the paper gold and silver markets are so intertwined with all the the bloody spider web of derivatives out there. Yeah, I'm just waiting for the disconnect. So I see further falling in gold and silver. So Alex has said about times ahead, how do you see deflation and inflation happening? Surely with debt defaults we'll see deflation, which scares the hell out of central banks who might overprint. Yep, I agree. You don't need hyperinflation like in Germany, but you can easily get in a situation like Russia where you just remove 3, 4, 5 or 6 zeros off your currency. Yeah, you get a currency devaluation. Surely we can position ourselves to take advantage of that transfer of wealth. Yeah, and if that happens, non-inflationary assets go to the moon. Bitcoin, bullion, not necessarily land, but yeah. So I'm bullish on Bitcoin and bullion mainly. So I don't know what that comment was by Jelty, but hey. Phil, it depends on how deep your pockets are and if you like margin calls. Yeah. So James asks, when do you reckon to wait on land purchases too? So personally, I'm not going to buy any land or any property until we're in the capitulation phase of the market. So if we just take the Dow, in fact, let's just take the FTSE. We're in the UK predominantly, or I am. Don't know about most of you guys. So here we have the FTSE, nice rising wedge in a falling market. Again, this is incredibly bearish setup here. So I see at least a 70% drop from top of drop at least. So if we're looking at say 7,500 divided by 1.7, so we're looking at least 3,500, 4,000, 3,500. So let's just say, let's move forward in time. I don't know when it's going to drop, but let's just say we get down to somewhere around here. The capitulation phase of the market, where you have ultimate despair, ultimate panic, is around here. And then you'll have some sort of bottoming pattern. This is where people will be going bust left, right and centre. You will be you'll be able to buy all sorts of things for a flipping bargain. And by that time, they were done all sorts of crazy inflationary measures. It's like, as in, currency printing, they'll ban cash, they'll release digital dollar, digital sterling. We'll have like it'll be ridiculous. That is when I want to buy property. So if you look at the UK property market right now, it's frozen. It is frozen. I'm battling. I'm not battling. I don't really give a shit what other people think. But as you know, like on Facebook, there's a lot of property buffs or bulls out there. And every time I say I'm really bearish on property, they're like, what do you know? You're just a trader. But just go back to basics. You have to understand with property, literally the only thing that's propping up the UK property market right now is mortgage issuance. Okay, so the fact that loads of people are getting new mortgages, that helps keep up the property prices afloat. But what's happened right now is that the lenders have run out of people that are normally eligible for good mortgages. So what's then happened is that we've now got 95% mortgages, 100% mortgages as long as you find a guarantor. And so they're loosening the mortgage requirements because they're running out of people to give mortgages to. So when you see a little sort of plateauing of mortgage issuance, that is the first warning sign of negative buoyancy in the not currency market, the not stock market, property market, the UK property market. And then when you combine the fact that everyone has been decimated, everyone's at work, everyone's losing money, everyone's in debt, everyone's like, I mean, the Corona business interruption loans are a bunch of bullshit. I've got what, 6, 7 businesses or so. I can't get a single freaking loan. Not that I need them, but I just want the interest-free loan. Like, if I can raise a couple $100,000 for interest-free for the first 12 months, what am I going to do with it? I'm going to put it in my freaking trading accounts and then give it back in a year. Like, that's why I want it. So personally, everything's frozen right now. And when the markets reopen, and let's say, you know, we're allowed out, we're allowed back to work. And by the way, it's not going to be one massive, you know, spring break party. They're going to slowly filter about, you know, certain types of people are allowed back to work, etc. That's what they're going to do, because the second wave of a pandemic is normally the worst. But everyone's spending habits have changed now. Everyone has had a massive punch in the face and realised, oh shit, I never had a rainy day fund in my life and I got screwed over. Or what am I going to do now? I'm not going to go on holiday. I'm not going to buy the extra car. I'm not going to upgrade my house. I'm going to make do with the house I'm in right now. I'm not going to buy a new property. I'm first of all going to build up a rainy day fund, 3 to 6 months of savings before I even think about buying anything else. And then when we eventually have helicopter cash from the Bank of England or some sort of whatever, some people, will go out spending, but most people will be like, thanks government, I'm just going to sit tight. This is why we had like the craziness of the Weimar Republic hyperinflation. Like they were printing out like ridiculous amounts of cash and people getting these massive paychecks and hoping that the people would go out and spend in the economy, but they didn't, because of people's spending habits changed because they were so shit scared they just stored it under the bed. And then eventually when you get to that little precipice where people have enough money stored under the mattress and they think, actually we've now got a 6 month savings, and they're still getting, you know, £1,000 a month paycheck from the government, you know, universal basic income, let's say, then they go, okay, let's start spending. And then the moment, you know, people start spending, all of that built up potential energy, all that extra currency supply is just going to slosh into the markets. The price sponge is going to whoop, prices go up, inflation goes nuts, and we'll see hyperinflation in a major developed nation. So, yeah, just like Argentina, Venezuela. God, Venezuela are fooked right now, big time. Buy land don't buy land in Venezuela. Not a good idea. So land, property, I'm super bearish on property, and I will not touch a property until like I can, like, put it this way, right? For me, obviously I'm just getting so this house I've been eyeing up for a long time. What's it called? Brook Hall for sale. There we go. I viewed this property in January this year. Now this house is just insane. It's up for 1.85 million. Like the annex it has, this is bigger than most houses. It's just nuts. This house has been sat empty, literally empty. No one's been in it. It's been empty, collecting cobwebs for 2 years, and they haven't been able to sell it for 2 freaking years. Now with what's happening right now, do you think they're going to sell this house? I mean, it's got its own pub in the annex. It's nuts. So I see us, or not us, I see houses like this on the higher scale getting absolutely demolished. Like house prices for the average 150 grand house aren't going to drop much. Houses that are priced like this, they're going to plummet, especially if they have a mortgage. I have no idea if this owner has a mortgage on the property. The fact that it's been sat there empty for 2 years probably means that this owner has no cash problems, probably filthy rich, and has no mortgage, so they can probably just go whatever. But big houses with mortgages, they're going to be screwed. So we'll probably see houses like the equivalent of like a 50% drop eventually for the higher end. Like I cannot see this house being sold. They rejected my offer, annoyingly, but hey, we'll see. I'll come back in a year and offer even less. We'll see. But that's my view on property, my own personal view. Take it as you want it. COVID stocks are hot right now. I suggest you look at ODX, AVCT, and GDR. Okay, I'm not looking to buy any stocks, but yeah, sure. When buying gold and silver coins, CoinInvest, does it make much difference buying Britannia or Krugerrands? I would. So with this, so Britannia. So if you're UK based and you're going to buy a lot, like when I say a lot, like over 500 ounces worth of silver, or over, let's say over 100 grand's worth of bullion, then I would stick to the Britannia because it's capital gains tax free and VAT free, because it's seen as legal tender. Like a 1 ounce gold coin, Britannia is £100 face value. Good for inheritance tax sort of workaround as well. So but if you're not, I would just stick to the maple leafs. The silver maple leaf or the gold maple leaf are the best quality gold and silver bullion out there. It's like 99.99% pure. It's just the build quality is just epic. Cameron, I'm thinking of doing a subscription-based business, holistic food basket, monthly one-off during this pandemic, fresh produce. Do it. Yeah, go for it. Everyone, I'm like the high street are dying. I've got a bricks and mortars property. Had to shut it down. Like the high street is getting absolutely rinsed. Amazon is just literally wiping the floor at the moment. So yeah, and we do all our shopping online now. Who do we use? It's not Fresh Foods. I can't remember. But yeah, do that if you can get your hands on good produce. Like I live in the middle of nowhere, and we have like a little village shop. It's like a convenience store, and they stock everything. But the guy who owns it is probably having the time of his life right now. Like if I was to buy a tub of Haagen-Dazs ice cream, whatever, like a little tub, he charges £6.50 when you can go to Tesco and buy it for like £3. And I bought like a little tub of honey, which is the size of like they're quite big toilet rolls actually, aren't they? Tub of honey for £6 as well. Like he is having like a 200% markup on freaking everything. So yeah, if you could do like a delivery based subscription thing, get rid of the gnaws of travel, etc. Yeah. Oh, that's another thing. High end cars are going to be absolutely decimated. People are not going to be buying cars, like fancy cars, or there's going to be diminished market for fancy cars. So when Tesla releases robot taxis and TAS becomes a real thing, transport as a service, that's going to boom. Put it this way, I've got 2 Teslas, right? One of them we're using a lot. The family, the Model X, we're using a lot, to go to the shops, blah blah blah. But my Model S, I literally have not moved it in over a month. Yet I've got that on finance. I'm paying £1,258 a month for Timmy, my Model S, and I literally haven't used it in 4 months. And I think there's loads of other people out there who've got some sort of car finance and barely using it. So I'm not too fussed because I've actually done way more miles than I should have, you know, with a yearly allowance. So I've done like 25,000 miles a year in that thing for 3 and a bit years. So online courses, so Mike Freeman, online courses, YouTube, etc., all doing well. So many at home, yeah. Like, for example, it's ridiculous. I've set up a new business for my wife, myfairypenpal.com, and this business is booming. Like, you would have thought it wouldn't have done anything, but I cannot explain. Like, we're employing staff now for this, like people around the block to help to facilitate this. Yeah, and it's a business I never thought would, you know, I just did it for, you know, for my WAPers, my business students, just to show you can set up an online business and grow it quickly. So yeah, that's doing well. Yeah, so online stuff. Romanians have signed a contract in advance because British people don't want to do any picking, unfortunately. Yeah, I know, we're lazy fuckers. Best place to learn to trade, Liam, The Realistic Trader. Screw it. I will plug it. So if you go to therealistictrader.com, it's worth doing the trading test drive. So literally you can have the first 10 hours worth of content in the course, 2 months access to the bot on a demo account and the Facebook group for 100 quid, and it's risk free. You can get your 100 quid back if you're not happy. So yeah, have a look at that. Suresh, do you think the earlier popular altcoins, Neo, Ripple, will reach previous highs? Blah blah blah. I don't know. I don't know. I think a lot will die by the wayside. Neo won't do anything till Neo 3.0 is out. That's what Da Hongfei said, the founder. So I really think it's only the blue chip cryptos that, you know, ones with big market cap that will survive. So for me personally, I'm just going to play with Bitcoin. It's the safest one out there at the moment. Maybe Ether, but yeah, Ether just does what Bitcoin does. Jordan Cooley, do I play COD, Warzone, blah blah blah. Oh man, I am a gamer, but I haven't gamed in over 6 months. Now I can't, and unfortunately I can't. I'm literally hustling like mad at the moment. This is literally the biggest gift you can ever have. Like, we're having 6 weeks of lockdown. It feels like Christmas Day every day. Fridge is full. No one's, you know, working. Now is the time to put in the effort and get a head start ahead of your competitors. So unfortunately, I'm working harder than I was pre-lockdown. Except I'm in my underwear. I'm literally dressed from the waist up every day. Alan, hi Simon, do you buy your gold? Yeah, gold and silver is from coininvest.com, and I do take physical delivery. Nick, great video, great t-shirt, buddy. Oh yeah, Akrotiri Arms. If you're in the Air Force, or I guess the Army, you'll know what the Akrotiri Arms is and how you get an Akrotiri Arms shirt. Some solid drinking won this shirt for me with their apple sours and stuff. Whiskey sours, sorry. Still cool. Cheers, Nick. Much appreciated. Could you not get a grant on a few businesses? Yes, Liam, I have. So I've got a 25k grant on one business, 10 grand on another one, and 10 on another one. You say you're bullish on Bitcoin. I'm waiting. I just think it's going to fall a bit more. Sorry. What do I think about REITs? They're screwed. Real estate investment trusts, screwed. We got another subprime mortgage collapse coming, boys and girls. We've got an auto loan subprime loan, ABS, auto-backed security. So subprime auto-backed security bubble. We got the energy junk bond bubble. We got student loan bubble. We got endless bubbles. All it takes is one bubble to properly pop, just like the oil one yesterday. We had a freaking samurai sword chop through that energy junk bond bubble yesterday, and Alex, would you not fund your school via cash flowing properties a long term past? Yeah, maybe. The thing with the school that I'm trying to set up, that's been hit big time. I'm going to have to pivot somehow. But for the school that I'm trying to set up, it will cost me a base minimum of 55 grand a month. So slightly frustrating. This has put a dent in my school plan. Okay. Someone has sent a link, a YouTube link. I say someone, it's Jordan, about retail market dying. Let's have a look.
0 hours contracts.
Oh, he looks familiar. Yeah, Ashley, the sports thingy. Mike Ashley, that's it. I will save that for my watch later list. Let's have a look. When was that? Oh, 2018. Dated, but I'll still watch it. Thanks, mate. Am I the only one who saw the dinosaur? and you maybe saw me interrupt myself as well. But yeah, this is my silly background. Any tips for getting interest-free loans if you're a limited company with no employees? I don't know where to start. It's hard. You have to go to the. It's a farce, mate. British Business Bank. You go to here. You go to the lenders. Looking. Where is it? Jesus Christ. Where? It's changed. Yeah, you go to the lenders and basically you just apply. A rule of thumb is they're not going to give you more than 25% of your last year's revenue. So that's one. But mind you, I still haven't succeeded. What I've had to do, because the banks, I think what's happening right now is interesting with the banks. They're freaking CUNTs. But they're just thinking in a business sense. What they're trying to do is they're trying to use this Corona Business Interruption Loan thing with the government backing 80%, and they're using this as an opportunity to recapitalise themselves. So they've got loads of funding circles there now. So they've got loads and loads of toxic debt on their books. And the public, you and I, and us businesses, we're seen as massive risks. So they don't really want to lend to us, even though the government's trying to force them to lend to us. So what they're doing is they're saying, okay, we'll lend to only the good businesses. So it's been 2% of applications have actually got their C-bill, the Corona Business Interruption Loan. And what they're doing is they're giving, yes, they have to do the interest-free for a year, but then they're charging, after the free year, it's 20+%. It's freaking Wonga loans backed by the government. And so they're using this as an opportunity to recapitalise themselves and then end up being able to own and get hold of businesses via debentures or personal guarantee. There's no personal guarantees up to 250k. But yeah, they're using this as a way to basically recapitalise themselves. So absolute fuckers. So hopefully Rishi prods them a bit more. Ideally, I mean, they don't have the facilities, but I suppose they could do it. It would be better if HMRC did the funding. It's instead of the banks. Because all this is doing is it's helping the bank executives get their year-end bonuses. James, excellent content. Thank you. Hope today's helped. Saw your Bitcoin this morning. Cool. Cameron, I would literally... Sorry, you had a question about how to market your online business. I would literally join the WAP. Do the 30-day trial. It's £7? This talks all about, what is it, £7, 30-day happiness guarantee. Yeah, this will teach you about how to basically get your online business out there, and it will show you exactly what I did with My Fairy Pen Pal. Because all we say is that you need to get yourself to the point where you've got a new online business that's chucking out £300 profit per month, and you can do that in 3 months. And I did it with My Fairy Pen Pal, and I got it to £450 revenue. And about £350 profit in the first 3 months, and it's now a lot more. So yeah, have a look at that, the WAP. Devinder, keep an eye on 10-year bond, T-note. I agree, but at the moment still not helping us. Martin, okay, cool, that's all the questions. Well, that's 1 hour 37. Thanks for all your time today. There's still 83 of you here, so I've only bored 20 odd people to death. So thank you, and I really hope it helps. And I'm sorry I'm a bit clueless with some of the directions. Stocks have to go down. They have to go down, but when and from where is the question. Okay, when and from where will they go down? We don't know. As we've seen, it's bounced off that level earlier, and it's been what now? It's coming back down. What's happening with oil? Oil, yeah, it's still. Oh, we've got a bit of a compression on oil. That should fall. Yeah, that's bearish. So yeah. Anyway, thank you, and I'll see you soon. I'm gonna get this recording up. Toodles.